Today is Sunday, February 26th, and then we're going to be doing a market review, going over, we do this every week on Sundays, and talk about maybe some of our best setups, our best swings, our best earnings plays, and the SPY range. So hopefully, depending on whatever your edge is, it could be, just trading the SPY, or you could be, swinging up to earnings, maybe risking a little bit swinging through. So all right. Okay, let's go over them. You first.
Okay. Thank you. All right, let's do the monthly chart really quick. Okay. The monthly chart really quick. Okay, so the monthly chart, this level here, let's call it 408 here, right? But we could see it later on the weekly chart that this is forming a little trend here, this ascending triangle pattern. We would expect, we would say the ascending triangle pattern, is there a breakout going to happen here, like explode here? Okay, or this trend breaks and we go back towards the 50-day on the weekly chart, on the monthly here. Okay, so does it test here again? Does it retest? And I'll tell you on a technical basis, the SPY doesn't, like if the SPY retests the 50, like it did here, like if it's retesting, right, it's not going to be good for the market. The last time it retested it, it went down. So like, I mean, here 2019, and then the big pandemic happened, and then there was no retest. But if we retest it here, it could be very bearish for the market if we retest, right? The market shouldn't be retesting the lows, is what I'm trying to tell you, right? We shouldn't be doing that if the market is strong. So we got to pay attention to it. And these bearish candles here, selling pressure, pushing it down, then boom, the following month was negative, was bad. But this one, negative selling pressure pushing it down. So it's very possible that March could be very bearish, right? And I'll make it, for me, the market, the sentiment has changed a little bit. Not even a little bit, a lot. And there's a lot of fundamental data now coming out, economic data, that suggests that inflation is around too long. The economy is a little weakening. The Feds have to react. So, okay, so we'll talk about that in a second here. But look at the weekly chart now. The weekly chart last week, we got selling pressure for 3 weeks straight up here. 1, 2, 3, right? And now we tested the 50 on the weekly, and we've broken through it. Okay, so maybe I drew this line incorrectly. Maybe it should be here. Let's say here. If I draw the line a little bit more straighter, I'd say here maybe, then we're still on trend. But notice how we've bounced off this area again. We're underneath the 50. So that's bearish here on the weekly, right? And if we break under this 393, which is the 200-day simple moving average on the daily chart, it'd be really bearish. And then we get to that level, I think we will test into this area. We'll call it, there's buyers here, right? There's definitely buyers in this area. And there's buyers here, up to here, right? There's pushing the level. So between 373 and 380, the market will most likely defend. But if that means there's a big demand zone here, I'm trying to draw a demand area here where the market goes to it, bounces, goes to it, bounces, goes to it, bounces, right? And the 200-day is coming up. The 200-day is at 370, it looks like. By that time, it'll be up to 375. So we're saying, yeah, okay, so I'm a little bit bearish here on the weekly chart as well, and I'm telling you the potential of it as it goes down, okay? But so here, do you want to chime in your commentary?
Yeah.
What do you? Okay, go ahead.
I completely agree with Michael, and that part where it's like there's going to be a drawdown. I was talking about the 397 level as it had to close above, and then we closed below this, right? So exactly like Michael's line too, right? Here. This was when there was a lot of capital market outflow, and the most inflow into the market, right? When we talked about this last week. But I wanted to show you something that I was observing from the expected move from the option standpoint. So if you look at this is back, I'm going to analyze, right? Think back. We're going back in history to February 3rd, okay? February 3rd. And the reason I'm going to show you why. So February 3rd, it's showing into last week. It was a 14-point move from here, right? 14.37 or so. Now, if you take 14.37 away from here, where does it take you? About 397. I mean, yep, right? 397, little plus like 397, 396 area. Where did it go? 396, 397. Pretty much right there, right? The expected move actually happened. Now, not only SPY, but it also did that for NVIDIA. Look at NVIDIA. 211, right? 2 weeks ago. NVIDIA 2 weeks ago on the 3rd was 211. And where did it go? About 25 points above that is above 25 points. Plus here is what? 236. Where did NVIDIA go? We all know. Like it went to about like 236, right? 235, 236, like right there, 236 on that candle, the spike. So if we imagine that this trend continues, this is what I look for. So let's say it's going into, oh, hold on, we have to go back to here. Let's say we're still calculating the downside move because I was saying, hey, I think until like March, we're going to see some type of pullback. If this continues all the way down, I'm usually looking for, okay, where does it continue till? So this was, what was it, 24th, right? This was into the 24th. That's where we're at now, the 396, 397. But see, it's like 10, 11, 12, 14, 16, 18, 21. Okay, a little bit like $3 difference here. So this could be the area where of reversal, or it could be maybe here where it's really tight. So I'm either thinking into this week, which is a week, 2 weeks later, or like right here, which is towards the end of the month, actually, where we see a pretty significant reversal in the market direction. So if we use this point, right, even the 25, that's another like 10 points or so. So that means 10 points down from SPX from here would bring it down to, that's not SPY, but bring it down to where like 96, 397, 10 points down would bring it like what, 87. Where is that line? Where is that line? Okay, that makes sense. 387. That's the 10 points down, right? This line here, boom, here. And then we see that, and then it starts reversing. Or we can see it possibly into this area, right? Which would make it this area where there's like a 2-3 point gap. And that would mean, okay, for the difference between 14 and 18, 19, 20 is maybe about like 4 to 4, 5, 6 points. So that would take it right to where the 390, right? So just watch for 390 or 387, I would say, if we do predict maybe some downside going into the next 2 weeks, okay? Just 2 weeks to give it an average. But I do feel like we're still going to like bounce. Like we're going to have some upside and then downsides because we've been seeing that for the past like ever since we saw 418, right? It's like been choppy. We see some recovery and it goes back down on Fridays, especially on Fridays. So just be careful of that.
All right. Okay. So there's a downside potential, and then if the market can break above, I would say, let's call it 400 first. The 50-day simple moving average is at 400. We can clear that and get close to 403. Then we could say that's the potential, and then 48. If the market is bullish on the economic data, but that's the potential, but just I don't think so. Okay, the biggest earnings has gone, in my opinion. The biggest earnings is gone, and the economic data is showing now a lot of weakness. Okay, so in conclusion, from my standpoint, okay, now that we're going to do the daily chart now, the daily chart, I think last week I thought that the market was bearish. Okay, so we're actually heading down here week over week. And I do think for my thesis this week, I think we're going to break the 200 simple moving average, at least test it. Okay, so we're going to test at 393, go as low as in this 390, and even down to
87, right?
387.
We got the same areas.
Okay, that's where I'm thinking. Okay, so we gotta play it day by day. Let's see how the market opens up, how bearish the market is. I'm not right. Those are the range. I don't think this week we're just gonna go 382. There's not enough economic data that's gonna push it down that far, but there's enough to break the 200 this week. Okay, so I think we're bearish here, and we are trading in a downward channel. Okay, fair enough. There's some technicals for you technicians. And there, okay, so let's start at 387 area here.
I'm
Okay,
glad we have the same area though.
we've broken out of this consolidation, which is really nice. And then we've hit this top, right? Now we can say, so it looks like this actually. So let's make it clear here. It looks like, so this area is broken out and then it's broken down through it. Now, another question is, does it hold here and sort of bounce back up? This is a continuation of a bigger up move, or this is a big pullback, a big sell-off for a bigger down. I'm leaning on the bear side. I'm actually thinking 65% is going down, 35% we put in a green candle. So probability wise, okay. So that's my S&P 500 chart.
Okay, so for me, for this week, it's showing 7 points on the expected move, right? It's really small, by the way. 750 is one of the smallest weekly moves. So just keep in mind the range. It could be pretty big, as in, like, if it goes 7 points up from here, it's going to be where? 403. But if it goes 7 points down, it's going to be what? Like 389, right? So the range could be big, but then it's not going to be so like where like we start going majorly in one direction. It's just compressed still. So yeah, and then that 387 actually, you know how we both said, okay, maybe 387. If you get this 12-point move, that's actually going into 2 weeks. 2 weeks out brings it to the 387. If you go 12 points up, right, that's going to take it to 409. So into the 2 weeks, that's kind of where I would target, but just inside this week, it's not going to be too much. I think more of a little bit more of a sell-off too.
Okay, so I want to do Tesla really quick, and then I want to do Apple. Okay, so those are the two charts because I want them to be consistent. Let's do Tesla and Apple. Okay, Tesla looks like this. It's this 390. This area is getting tested, and there's a little demand area that's like sitting right here, right? Like this area of demand, right? This is the area where it was going to bounce in this area, see, go up, but since it broke it, it became a big supply, like an area of big selling pressure, pushing it back down. So this area is now coming into test. So Tesla's really going to have to defend itself in this consolidation. So that tells me, because Tesla's a big part of the S&P 500, this market, the SPY is going to be a little bit more choppy. So I don't, right? Unless Tesla clears this. If Tesla breaks below 180, then it's going to be really bearish for the market. Okay, so I could see there's consolidation in Tesla. It's going to be more difficult to trade. But if it starts breaking 387, I'm bearish. Okay, so like, and is there a possibility? Like, we want to cover the possibility. Like, is it a possibility that the market sort of Tesla consolidates here and breaks out towards here? Yes, there's investor day on this week for Tesla, and Tesla will come up with a lot. It could come up with a lot of news depending on what Elon says, right? And then all the engineers will come and figure out if Elon Musk is going to deliver on his promises. And usually he over promises. That's the issue. Okay. So, okay, Tesla, do you have any comment with Tesla? I'm actually bearish on the Tesla chart, but I'm saying more consolidation. That's what it looks like. I'm just going to pull back.
Okay. Well, I mean, Tesla did have earnings, right? So if you just look at this, just imagine all of this didn't count because this wasn't actually in earnings. So this was actually after earnings reported, right? After earnings reported, it was here. After earnings reported, it was here. So this is quarter three. All we did on quarter four was come back to quarter three's price. If you actually think about it, this has nothing to do with the value. Okay. This is actually after the earnings reported, what happened from here to here. So this line is here, which could be anywhere between like, okay, 188, 186, right? So if we look at 188, 186, but then we look at the upside, it's like 220. So if we look at this, okay, so maybe say we wanted to play short term, right? And we see the market going up. Okay, let's see which way it's actually going. 186 implied volatility. Okay, so here, 22, 186, 215. So do you see this smallest IV? So this is the one being shorted. And there's enough volume here where it's like, okay, buying, selling, right? Smallest IV. IV determines, okay, are you buying or selling or not? And here too, okay, this is the one being shorted, right? Okay, maybe here too. So this area, 85, 85, 84, 84, 84, 84, 85. So like maybe into this area, 217. Okay, that makes sense, right? So if it starts like massively getting volume, there's still a lot of calls here, but then there's enough puts. Okay, the call side is stronger, 94%. So I view implied volatility right now, it's more sentimentally bullish. And going into next week, 78, 74, it gets a little bit more neutral. 73, a little more neutral again. We'll just go break it down so that we know which expiry. Okay, so overall sentiment, call side stronger, right? Implied volatility on the call side still stronger. So this one, I think it's okay. Okay, starting here, April, look, 71%, 71%. So into this week, it could be somewhat bullish directionally and then kind of like slow down into April, right? And then start going up again because if there's more catalyst into here, you could tell too, look, 17, 22, 27, 31, 34, 36. The moves get smaller and smaller and smaller. So it doesn't mean you can't trade into this week. It means like just like whatever move that happens in majority of this 20-point move, you can swing it with a longer time frame. So you could even get like, let's say the 20, 25, 30 points out. But then once it makes this tighter move, this 20-point move, just make sure just take some profits, put a stop loss. So I think I really like this expiry, aiming for this move, right? 17 to 20 points, it back into the 215 if we're going to play short term. And you can get 17 points. Okay, let's just say 20 points back into the 215 area. Like this isn't that expensive. It's okay, 13,000 open interest. That's like pretty okay. Like even you could even get up to here, the 220. So if you want to get out of the money, or you can just get a spread like long here and then short into the 215, 220. And you can see, okay, 215, 220. This is holding. Okay, so we just have to see if I would say this is the major support, 450. That's the one I would kind of like go for if you're aiming short term. If you're aiming longer term, you could just go for the 25-point expected move, the delta, and stay inside of that. So 0.25 delta, any of the expires longer.
Okay, so Tesla, I like the pace right now. I'm really enjoying it. By the way, I'm letting you guys know. Like we're going back and forth, we're having a good discussion. Okay, and then so Apple is, look at the Apple chart. Apple's strong. It goes from here to here. Like it shoots up like 130 to 170. It's strong, and when it rallies, it's strong. But the question is the rally done? Right? Yeah, the rally is done because we've consolidated here, and we've broken down below the ascending triangle. It was supposed to keep going, but now, and then it tested the 200 and it closed under the 200 on Apple. Tesla's very bearish. So that leads me to believe that the market will be very bearish in March, in my opinion. Bearish in March. I won't say okay. So Apple's potential for this week on the way down is, I would say, 142 area and possibly maybe 30% chance 140. It's already broken down below the 200, so there's going to be a lot of sellers stepping in. A lot of institutions will stop out of this trade, and the short sellers, the long-term short sellers, will come in to attack this move. When the guys that are sitting on the daily chart, watching the 200, watch this break, are now attacking it. So there's going to be a lot of selling pressure taking it down. And it follows, right? And if we look at the candle, looking at the candlestick analysis, right? Just looking, we're talking about buyers coming in, pushing it back up. Buyers coming in, pushing it back up. Buyers stepping in, pushing it back up. But guess what? The next day, the market is selling off after buyers are stepping in. That's very weak on this chart. Okay, so so more weakness for Apple. And let's see, put in another line here. It closed at 145. That's a good line here. If tomorrow retest 145, let's short it. Let's get puts for a quick scalp on this one. So you'll see it on. I'll remind you guys. I'm posting every morning between 9:30 a.m. Before 9:30 a.m. I'm putting some couple trade ideas for you guys to take, and I'm taking them too. I'm scalping either the puts or the calls on the S&P 500 or Tesla. So on Apple,
Michael is so good at the range. He's so good at the, like, 4 a.m. before the market opens. Like, his range is sick. I'm sorry, I just had to say that. It's just like, you're so good at that. Like, I'm like,
so pay attention to the ranges. I'm not gonna say we're 100% accurate on all the, like, I can't say
really good.
But I can tell you the key levels, and I could tell you based on the data that's coming out, based on the news, where I think the sentiment is, like, right. So, and then you could practice over time. So pay attention to daily ranges, right? And give me an emoji.
Yes, make sure you check.
Yeah, so show me that you read it. Okay, so Apple, bearish on Apple. Okay, so
I want to go over Apple real quick too.
Okay, go ahead.
Okay, so I have Apple support here. There's 2 areas of support. Look, Apple after earnings, like into earnings, after earnings, into earnings. Where is it going? Maybe after earnings, right? This is what, if you go down to March 7th. So we can see these little, like, don't you see this maybe happening? Possibly, right? Or it might take like another like pump, like line into like the end of the month or something. But I would think, okay, near-term target for 143 on the downside to the 148 on the upside, right? 143 and 148. And I'll show you why. So it's 4 points basically on the expected move, which is actually not that much. So 4 points up, okay, maybe we could get back to the 150 area, or 4 points down, right? From, let's just say, this top area, 146, would take it to like 142, right? So that's like already 4 points down, 4 points up. But I just kind of see it selling off more, just like him. So even though Tesla could go up, Apple could go down, right? And you can see it on the options chain again. This one is because you can see where 50 delta is. 50 delta here, I talked about this last week again. 50 delta, 50 delta, 50 delta. It's hardly moving. Maybe into like here, 50 delta, basically like a 1 point change, right? 50 delta. The reason I'm talking about 50 delta is 50 delta is what's supposed to be at the money. The deeper in the money it is on the puts, or out of the money it's on the calls, is the more bullish it is, right? But the fact that it can't move, that means the expected move is stagnant until, oh my God, wow, when is it changing? So you know how I was like, hey, the dip buy is going to be May? Here. It doesn't change until June. That means if Apple has the heaviest weight on S&P 500, what's it going to do to the SPY, right? It's going to make it choppy as hell. So just be careful on Apple. Know that it's going to be very small incremental moves up and down, like 4 or 5 points. And you can tell where the 50 delta is compared to like something like Tesla, right? It's a more growth stock. Like look at where did it go? Okay, look at the 50 delta here. 50 is like at the money, then it goes even further and further, and now you can't even see it. It's so like deep in the money here, right? So it just shows like how much, why this matters is just one quick thing. I want to show you something. The expected move, right? 17 points is not from the at the money, by the way. It's from the 50 delta on the puts. So if the 50 delta on the puts is here, right? It's 200, and then you add the expected move, right? 200 plus 30. Oh, it just changed to 31. That's funny. While we were talking. Okay, 231, right? 231, 230, right here. Look where 25 delta is, like right in between here. Does that make sense? So 50 delta is actually calculating the expected move, like the expected move from here, because that's where 25 delta should be anyways. So it's gonna have bigger and bigger moves on the long side, and you can tell, okay, this is not gonna have much bigger growth, like have a higher beta than the SPY. So beta is like compared to the SPY, right? Dollar Tree? Okay, Michael mentioned Dollar Tree. This one, oh, it's saying like, let's go long, right? Okay, so what is this saying? Wow, good pick, Michael. Sorry.
Fine. I finally did something.
Okay, go for it. Go for your mic. Go for your Dollar Tree. Wow, that's a big one.
What?
You go with your chart, with your Dollar Tree chart.
I mean, Dollar Tree. I'll tell you why. Because most of the charts were above the 200, right? And look, Dollar Tree is under the 200.
Dang.
So, and then it kind of makes sense to me because it held such a big level here. Like it held here.
Oh
Basically
my god,
held.
this is such an obvious long.
So now we have obvious lows and obvious long for the
Good one. Great
Dollar
pick.
Tree. So I think because it makes sense if everyone's going through a recession, then people are going to the
Don't
dollar
want to
store.
save money.
No, they don't want to save money. They're going broke, so they need to go to the dollar store.
Okay. This one last quarter, it was at 155 after a 120 report. This time they're jumping, and it's even priced underneath that. So, and it's even saying, look at the edge. Like, I want to show you something. Look, this is a dead cat bounce. It's actually a term. Like, oh my god, that's so funny. Okay, so let's see what they're saying about this, okay?
I just want to look at their financials really quick. Did they do
Okay.
really well last quarter?
Check.
I'll look.
Okay, while you check, I'm going to show you something. While you check, let me know when you're ready. So let's look at some of the options that's put in for this. Okay, DLTR. That kind of looks fun, right? Okay, puts, calls. So this is at currently spot price, right? This is the current price. And, okay, this could change. I think this is actually a long, though, DLTR. DLTR. Hmm. $146. I'll take this out. Is there it? 151? 151? Okay, 151. 151 from here, 6 points, right? 6 points. It's actually showing higher. So I'm like, this is wrong then. Okay, this is wrong. Edit. Oops. Hold on. Okay. This area looks more like here, right? Okay, that makes more sense. 150. Oh, shoot. Wow, this is such a good area. 156. Okay, 150.
Estimated
That's 12 points, right? Oh, look, 11 points. Look. 1185, right? You guys just saw what I did. It's so simple, right? I just look for the major line, right? Boom, 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 here. All of that. And it's like, okay, I just use that extension. And I don't like red. So sorry. It's just like red makes me think it's not good. So this is a dead cat bounce from this area, basically, right? And from here, 144 to 156, how much is that? That's like 11 to 12 points. That's showing on the expected move. So if we got like into the 156 or 150, oh, look, all of this is green. So 155, 156. If this went in the money, you get like a 3x, right? So, and the implied volatility is actually not that high. So this is a good one, Michael. I really like this one. It's like 155. Michael's so good at finding these. Thanks. This is a better price. Look, this is only $2, right? This is almost like, okay, if you can get like a really low price, that's the max I would go for, 155. But if you're going to be like so close to being at the edge of like the expected move, like you should get the 150 versus like if you're getting like closer, right? The closer like 152 here, like this area. If you're getting short term, you could go like 155 if you're going. Yeah, this is better. A little bit more liquidity, a little bit more, right? So if you're going for the max strike, like just give yourself a little bit of cushion so that you're not stuck. You want to be in the money. Do you want to go over the financials on it?
Well, their financials are good. They beat in the last 3 quarters, and you can see their EPS here. They're doing look their estimate. They're beating every single time. And look at it in the quarter. Their estimate is even higher than last year. In a slowing economy, they're actually really good. So, and I did pull up their financials, and they look good. I don't know, like look, they did better than 2022 was better than 21, and 30 weeks ended. That's higher. The last time they
Okay.
reported, they're reporting higher. They're generating
So
more revenue.
we found
So
some good ones.
we
Okay.
found
So
something.
So this
So
is a good one. We can short low. We could go long Dollar Tree. We could go long ZS, and then we could go long. I forgot some other stuff. Like this is tricky, right? It's a process. Like we have to like filter out like what's a good one, what's a bad one, what's gonna give us some like potential versus not.
yeah. So